Hello, everyone. Thank you for being on early here. We'll just give another minute here and get started, okay? Thank you so much for those who are on time and early. Good morning, good afternoon, depending on where you're in the country. My name is Josh Elohim. I'll be your speaker for today. Thank you so much all for attending and coming on board here. So just some quick housekeeping for the purposes of the call. Everyone's going to be muted so we can get through this smoothly. If you have questions, please put them on the question box there. After we're done, we're going to go through a Q&A session, answer all your questions, and keep things moving here. So let's go ahead and have some fun to get started. If for some reason you don't have Quote and Apply, you're not using our software yet, you're on here for the first time, you can go into the chat box where you can find a sign-up link where you can get access to our software right away. So again, really appreciate everyone jumping on here. Hopefully everyone's safe amongst all this craziness going on in the world. Long-term care, a new way to plan for long-term care was the goal to talk about today for our webinar. So before I can talk about the right way to do this, why don't we talk about what's happened in the past? So originally we had what's called traditional long-term care. Traditional long-term care was phenomenal. It was very inexpensive, built-in inflation riders, and life was good. And some of these plans that people have, when I review them, I'm like, hey, I wouldn't touch this with a 10-foot pole. This is amazing. We had about 25 carriers that offered traditional long-term care, and things were great. Let's fast forward about 10 or 15 years ago. We started having all of these claims that the carriers were not prepared for. So claim after claim after claim. So when you fast forward to right now, when we look at traditional long-term care, here's some of the challenges we're facing. Now it's extremely expensive for the same exact thing you got before. The second thing, that the problem we ran into was that the carriers can raise the price on you. So you're not locked in. I don't know if you all heard, but Mass Mutual had like a 75% price increase on their long-term care a year or two back. Genworth just had a huge increase in their long-term care. So you're not locked in. The third thing, which is the most important thing to me, is that it's also use it or lose it. You could pay premiums for 25, 30, 40 years, never have a long-term care issue, and guess what? All your money is gone. That's pretty expensive auto insurance. Would you agree? I would so myself. So the life insurance carriers finally got smart, and they created something called a long-term care rider. By a raise of hands, who's heard of a long-term care rider? Anybody? Anybody? If you have, great. If you have not, let's have a conversation here. To keep this really simple, whatever my death benefit is, I add the rider to my life insurance policy. It does have to be on a new plan. You can't just add it to your existing plan. So I add a rider to my life insurance policy. Whatever my death benefit is, it simply gives me that pool of money for long-term care. If I have $1 million death benefit, that's $1 million pool of money for long-term care. If there is a long-term care issue, I can draw down from that death benefit dollar for dollar. So let's go ahead and I'm going to pause there for a quick second. Let's go ahead and jump in. Hopefully everyone on this call has seen, knows about Quote and Apply, knows about our software. Again, if for some reason you have not, you can go ahead into the chat there where I put a link in there for you to go ahead and sign up for your account. So I'm just going to fly through this pretty quickly. First, last name. I'm not going to spend time on this. Skip this. I am going to put someone in their 40s for a specific reason here, okay? I just want to kind of show you why 40-year-olds are having this conversation now. So if I want to go to start showing illustrations for long-term care riders, I'm going to go to Lifetime here, and then I have two options I'm going to select. The first option I'm looking at is there's two things. I can either go for, maybe I want to have three bells and whistles. I want to have the cash in the policy, I want to have the pool of money for long-term care, and I want to have a death benefit. I would go with Protection IUL. So Protection IUL right here. If I'm not as concerned about the cash, I can go with two bells and whistles where I can go with Universal Life. So for now, let's just go with the Protection IUL. So I'm going to run this illustration right now. One thing I want to go over with you is kind of some visuals before I dive into this here. Why are we having this conversation? And we just went over a few things here, but this is a great marketing piece that you can use and quote and apply. It's right in the BOSS system as well. So if you go, so the key phrase that people love to use is what we call living benefits now. What can I get while I'm alive? We know that life insurance is normally known as a death benefit, right? So if you want to write this down, a great pitch you can ask ask your clients is, do you have the the old type of insurance or the new kind? What do you mean? Well, the old type is geared towards a death benefit, right? If I'm not here, for my beneficiaries, the new type of insurance is geared towards living benefits. And that's what we're really talking about here is long-term care is a living benefit when used as a rider. So discover the living benefits from long-term care. Now you think that long-term care might be unnecessary. Well, why don't you might want to think again. Look at the chances of being in a fire, 1 in 1,200. Chance of being in an auto accident, 1 in 240. Look at the chance in the long-term care, 1 in 2. This was a shocker to me. I had no clue, but this is absolutely crazy that 1 in 2 people are going to need long-term care. Now, you wouldn't consider going without home or auto insurance. Why are we risking long-term care? Even more of an eye-opener for me, look at the estimated cost here. In 2013, $75,000 a year. Look at 2048, almost $500,000 a year to pay for long-term care. We have a serious problem brewing here. Hopefully some of you have attended. I did a webinar a while back calling the LTC tsunami that's coming. We had about 500 agents that registered for that, the biggest webinar we've done in Back Nine history. There is a big problem right now, and you have the keys and the solutions to help your clients out. Are you comfortable enough having this conversation? I always tell people it's not your job to sell anything. Your job is to educate people. That's it. If they don't want to do it, you dip your hands in some water, you wash them, and you say, I've done my part. I do recommend whatever you're trying to offer the client, that you print out a form or write something up that make them sign it that says, hey, you offered this to me and I didn't want it. And that way it helps out to make sure that you've done your job. So if you look here, how does this long-term care rider work? We kind of discussed it, but just to summarize, when you add the rider, it gives you a pool of money for the death benefit. If there is a long-term care issue, it can draw down from that death benefit dollar for dollar. Any money you take out for long-term care is income tax free. Any remaining death benefit you don't use will go to the beneficiaries tax free. And then any cash value you pull from that policy, if you do that, will also be tax free as well. But here's the key thing. Again, no matter what happens with these policies, your benefit's going to be used. Again, whether it's for long-term care, whether it's for retirement income, or whether it's for death, transferring to your beneficiaries tax-free. Here's a case study about Mary, whose parents had some major long-term care issues. She didn't want to be a burden on her kids, so she took out a $500,000 life insurance policy with the rider, and that way she's taking care of what she needs. If not, she can use it for retirement income or use it for cash value. This piece is in the handouts, so you can go ahead and dive into the handouts there, and you can see that marketing piece. I'd highly recommend sending it out to your current future clients. It's a great way to get some buzz going there and started having some conversations. Another great piece that I really like, this is also in the handouts, John Hancock put it together. It's called Dare to Compare. Because a lot of people don't know, like, we have all this craziness going on now. We have critical illness riders, we have chronic illness riders, we have long-term care riders. What does it all mean? Well, you cannot use the word long-term care unless it's not true long-term care. So how do I get the money out of this? If it's long-term care, I have to have 2 of the 6 ADLs. I can't feed myself, I can't bathe myself, 90-day elimination period, and you can accelerate that death benefit dollar for dollar. I would study this piece though, because again, this is going to give you a breakdown of what type of rider. Is it reimbursement? Is it indemnity? How does it work? How does the money come out? Then the most important thing is, how much does this cost at the end here? You see that? So I can see what the cost is. And it gives it to you for all the carriers. There's only a handful of companies that have a true long-term care rider. The 2 that we have on Quote and Apply. So hopefully that's in the handout. Hopefully you guys and gals can take advantage and look at this. I'm going to give you another reason why. So I ran that illustration. I'm back to my illustration now. Okay, I just wanted to give you some visuals there. So if I want to add the long-term care rider, all I do is scroll to the bottom here and I say with LTC rider. You see, don't confuse this with chronic illness if it's just long-term care rider by itself. There you go. So now I can get up to 4% of $1 million or up to $40,000 a month. Hopefully that you're going to avoid that sounds like it's too much money. We just went over that, right? So there you go. And then who wants to pay premium at 80, 90 years old? I know I don't. So we can change this. So we can do it pay to age 65. My favorite is a 10 pay because people can see 10 years down the road. So I'm going to go and hit this run illustration here. So the beautiful thing of our software is that you have the ability to pivot very quickly. I can't even say my lines anymore. It just updates too quickly here. So there you go. I'm going to click on this PDF button, but I'm also going to show you, I just added the long-term care rider. Does everyone see that? By a raise of hands, how many people heard about what happened in the state of Washington with long-term care? Anybody? Anybody? It was total pandemonium. Hopefully, so if you don't know, what the state of Washington did was very similar to what they did in California for health insurance. They made it mandatory. If you didn't have long-term care insurance, they made it mandatory, or else you're going to be taxed on that in Washington. I've never seen anything like it before. We were getting phone calls from 30 and 40-year-olds asking about long-term care. When was the last time any of you got phone calls from 30 and 40-year-olds asking about long-term care? It was so crazy that the carriers had to pull their products from the state of Washington. So you could not get anything in Washington for months and months and months. I've been doing this for 11 years. I've never seen anything like it before. Well, do you all know that they're planning on doing this in 8 or 9 other states? And there's a good chance that they're going to do it in the state where you live in. So if you're not prepared for this, I would plan and get really knowledgeable about the long-term care rider, how it works, because it's probably going to be coming to your state at some point very soon here. If you're ready for this, you're going to be able to really help out a lot of people. If you have any questions, again, please put that in the chat. Love the chance to have a conversation with you. So I just went ahead and ran that illustration. I can't get enough of how cool this is, where you can, so the 2 carriers that I like, again, John Hancock is one of them. If you want to get the 3 bells and whistles, I would go with John Hancock, meaning the pool of money for long-term care, the cash value growing in the policy, and then also the death benefit. If you're not, John Hancock does not have a true guaranteed UL. If you want to have 2 bells and whistles, I would go with Nationwide because they have a true guaranteed UL. So you get the pool of money for long-term care with Nationwide. You also get the death benefit. So, but as you'll see here, if I scroll down, they're going to be a little more expensive, but you're paying for those guarantees though. So let's go back to our illustration. So if you're going to go with the 3 bells and whistles, the 3 bells and whistles is also really good for younger people. And I'm going to show you a younger person here. But I've already also explained to you why. Why are we having this conversation now with 30 and 40 and 50-year-olds? Well, look, so we got a male preferred, I'll just 44 here. Here's my 10 pay premium. Again, here we go. Here's my $1 million pool of money for long-term care / death benefit. I can get up to 4% or up to $40,000 a month to pay for long-term care. And here's what it covers. Would you all agree that people want to get taken care of in their home? So do you all hear me saying up to $40,000? Well, I just want to make sure everyone understands how this works. The reason why I'm saying up to is that every state has what's called a per HIPAA diem amount. In California, I believe it's $320 a day right now. So multiply that by 30, I can get around $10,000 a month for long-term care with this plan right now. There is no inflation built into these. So what they use is that per HIPAA diem amount. So as inflation goes up, that's going to go up. And you can Google it to see what it is in your city, your state, but it's going to keep on going up and up. And that's what will allow you to get to that $40,000. Does that make sense, everybody? So that's how these work here. Up to is why I say that. So let's go ahead and dive down to the old meat and potatoes. I see questions coming in. Ali, how's it going for you? Putting you right on the spot here. I won't read your question now, but glad you're on here learning. Okay, so let's dive down to the old meat and potatoes here. So again, this is not going to look the same for a 60-year-old, okay? But a 60-year-old might not be as worried about growing cash value either. So let's have a look here. To recap, we got a male preferred 44. There's my 10-pay premium. Again, we're not doing this forever. We're doing this for 10 years during that person's income earning years. So let's recap. Why are we having this conversation? First thing is we're talking about the pool of money for long-term care. So we have $1 million pool of money for long-term care. To me, I'll do this in the order of importance. That's why we're having this conversation. That's called a living benefit, right, everybody? There you go. The second thing is that our other living benefit is the cash growing in this policy. So this is an IUL policy. Does everyone see protection IUL? Does everyone see that? Now, the only thing is it's a little bit different where it's a little bit geared more towards a death benefit than accumulation, but this is still based on the S&P 500. There's a cap in the floor and the money's growing here. So look at 5.14%. For those of you that don't know what an IUL is or how it works, basically I participate in the upside of the equation, but not the downside here. So for a younger person, we have cash accumulation and we have growth here. So I'm still creating that non-reportable tax-free income, that story I tell as well. But look here, here's the real sizzle for a younger person, okay? If you look here, we got a 44-year-old. Over their income earning years, they put in $136,000, okay, for 10 years. Then they're done. We're just doing a 10-pay here. So again, if I scroll down here, let's look at their retirement age 65, right? Again, I put in 136. At age 65, look what I have sitting in my cash value for my retirement income. I would never use the word free insurance, but do you see here that I have more money than what I put in sitting in my retirement income bucket here? This is the sizzle for a 30 and 40-year-old to start having this conversation. Do you all know that you can add this rider to a policy as young as 18 years old? Why would I ever do that? Well, guess what? You're paying this, you're getting the same exact thing at, call it, 30, 40 as you're getting at 50, 60. The only difference is you're paying that much more for the same exact thing. And unfortunately, our parents, they didn't plan. You don't plan to fail, you fail to plan, right? They didn't plan for this. So they're backpedaling now and they're trying to figure out how to deal with this. Well, listen, you can deal with this in the right way if you deal it when people are younger. And with these states now passing laws where it's mandatory to have long-term care, these conversations are coming up more and more. Now, again, one argument you might say, hey, how do you know if you're going to need long-term care at 65? Well, obviously you don't, but you don't have to touch this money. Look, it just keeps on growing. So I think at some point you can say, hey, this money is going to keep on growing. So this is kind of three bells and whistles all at the same time. If you're a financial planner on the call, we want to protect your your AUM, right? So what better way to do that? We know that if there's a long-term care issue with one of your clients, it's one of the fastest ways to drain out that client's bank account. So why not? Let's make sure we set up your clients with this here to protect your clients, and then also protects your AUM as well. So again, this is something that we're working with a lot of financial planners and helping their clients to be able to plan for this here. And again, they have 3 bells and whistles to cover if something goes wrong. This is really, this gives people peace of mind right here. So that's a simple sales strategy, adding the long-term care rider. Listen, I don't want to beat around the bush. There's full underwriting for long-term care. So this is a tremendous application right here. So it's, again, you're doing underwriting for life insurance and you're doing underwriting for long-term care. If your client's in their 40s, though, they have a much better chance of not having any long-term care issues yet, meaning that you can get underwritten pretty easily here. And again, the money they put into the policy is sitting in their retirement income bucket. Does everyone see that again? That's the sizzle right there. Why would I do this so young? Because I have more time. That's the only reason why the money. If this is a 60-year-old, you might have a quarter of what you're put in here in terms of your cash value. So I just want to make that clear. That's the sweet spot here. Start having this conversation with your younger clients about long-term care because it's very easy to do it when they're young and healthy. So let's say you talk to your clients like, hey, this is great. I love this. $1 million is a little steep. Can we do 750? Can we do 500? Well, in the past, you had to go back to your wholesaler, maybe you made a couple days or a week. Now your client's cold. You have to start all over again. Well, now I can literally just put in 500,000, change the death benefit. If I want to change the payment strategy, I can do that as well. I go to the bottom, I hit rerun quote. Again, never in the history of our business have you, the agent, been able to pivot so quickly right in front of your client. So Zoom has been truly a game changer for my practice because you can get I'm the agent, you're the client. We can get on the phone here. You don't have to leave your house or your office, and I can do this presentation with a husband and a wife at the same time. And again, when you give everyone answer all their questions, they tend to make decisions much faster. Would you all agree? And that's all we do here is just give people the information. So if there's 500,000, this is great. What is 250? There should be something for everybody because I can go down to $100,000. I like to use $1 million because it's very easy to say, what's half, what's 10%. You can pivot from there. But again, start high, go low as well, right? So I can go down to 100,000. So there should be something for everybody here, in every part of the country here, okay? Perfect. I see the questions just piling up here. Keep on asking them. I promise I will get to them here. So again, if I want to go with the 3 bells and whistles, I like John Hancock. Again, just to recap, the pool of money for long-term care. They have the cash value growing in the policy and also have the death benefit. If I'm not a fan of this, guarantees versus non-guarantees, I can go with Nationwide. They're going to cost more money, but I can go with 2 bells and whistles where I can have a guaranteed death benefit, again, and the pool of money for long-term care. This is extremely easy. There's no reason why you can't have this conversation with your client. Now, you do have to have an 8-hour LTC certificate. It takes about 20 minutes. Very simple, very easy. That should not hold you back. That's the only thing you need besides a normal life insurance license to be able to have this conversation with your clients, okay? Perfect. So the client's like, hey, you've answered all my questions. What's next? We all know what that means, right? So I always joke around like, whoa, slow down here. I'm glad you like John Hancock in this situation, but they actually want to date you as well, meaning an application and an exam. So that's a point I always try to make, that all they're saying yes to, if they say yes right now, is an application and an exam. That's it. One question that they always want to try to pause you on or say, hey, I'll get back to you on, is they're going to ask you about, I don't know exactly how much money I want to do. I don't know what my death benefit should be. I don't know how much money to spend right now or how much I can spend. They'll typically try to push you off there. A very easy way to keep moving here is say, hey, what I recommend you do is apply for the most you think you might want. Apply for the most, because it's very easy once you get that offer to come down to fit your budget. But it's a little bit harder once we get the approval and you say, hey, I want to go from 500 to $1 million. Does that make sense, everybody? So it just kind of calms the person down that you don't have to pick an exact dollar amount you want right now. What's the most you might possibly want? You know what? The most we probably consider is $1 million. Okay, so let's just apply for $1 million, get the offer, because again, this could change. You can go from a standard to a preferred, or from a preferred to a standard. We have to see what that offer is. And most of the time, the client says, okay, this is great. So again, you can stay with John Hancock, you can change it. So again, this is a 60 or a 70-page paper application. So in the past, you pull this bad boy out, your client has a heart attack on the spot and dies, there goes your case. Well, now, does everyone see this continue button? I just hit continue. It brings me right into the application there. No more paper anymore. So we're finally saving the trees in Costa Rica here, okay, guys? So again, email, I'm gonna fly through this pretty quickly. I'm gonna put in my company information. I've done this many, many times with/for agents as well. If you're not comfortable having this conversation, you see I'm pretty comfortable with the software, get me on a call. I won't do it forever complimentary. For the first 1 or 2, I'm willing to do this presentation for you. I've helped out a lot of agents get over the hump. If you still need me after that, I'll probably go on the app for 25%, but I think that's very fair for helping out your clients. So I'm gonna put some company information in here. Put me to the test though. I'm tired of being on the back burner here. I wanna help out. So company information, will this person own the policy? Let's just say yes. Trust owned, business individual. We'll just say Mrs. Doe for now. We'll say that's the wife. I can add a contingent beneficiary. We'll skip over that. Income, assets, liabilities, put in a social, state, driver's license. You can all see I've done this a few times, right? Just a few. Does this person have an existing life insurance? You can say right here. Oh, this is a good point. We're seeing a lot of replacements right now with policies. So you say, Josh, maybe I don't have any specific cases for this. Well, what you want to start offering your clients is policy reviews. You can review their current insurance. So what's the biggest opportunity? We see a lot of clients have these whole life policies, right? Maybe they have a lot of cash in there. They don't want to, they've gone from a growth phase to a stability phase. They don't want to keep on paying premium. So what we've seen a lot of is that we analyze the policy. We can actually show, do a 1035, moving money from one policy to another with no tax issues. And then we can show no additional premium. A lot of the time it buys the same amount, if not more death benefit. And in some situations, paying no more premium or less premium. It's truly a no-brainer to have a conversation with your clients about. And I can add the long-term care rider to the policy. So the client goes from having something not really using to getting long-term care, and it still have a death benefit. And if they want, they could have some cash growing in the policy as well with no additional premium. Where do I sign? So you can do 1035s here. Let's just say no for now, that they don't have any insurance to keep it moving. We all know about those nightmare APSs that the carriers ask for sometimes. How about a built-in portal here where I can go on here and pick on the spot, pick my medical facility. Let's just say it was UCLA. What's your username? What's your password? Do I pass the screen to you? When I hit that connect button, we're able to pull those medical records instantaneously right on the spot. Truly a game changer for our business. I can also just, if I don't know my password, I can reset it or create a new one or just say no. Send a text message or an email. Client gets that on their own free time. I could also say no. We're right here at the end of the game here. I don't know if you all know about this, but there is a really cool feature where I can actually hit this invite button. Maybe I've done this for my client and I can't go any further. I can literally just go ahead and hit copy here, open up an email. Hey, Mr. Smith, great talking to you. Took the liberty of starting an app for you. He clicks on the link, puts in a date of birth. It brings you right back to wherever you left off in the application. That's called the invite button if you don't know about that. So I can answer some questions. If I didn't put that height weight in the beginning, I have to put it there now. I picked Nationwide because they have a few health questions. I'm not going to beat around the bush. Just got answered those questions. John Hancock does have more. So I can actually fill out some banking information routing number here, so I don't have to ask for it again, or in some situations I can bind coverage or just say no. I'm sure you've all dealt with these nightmare exams that we have to get done sometimes, right? From the examiner to the agent to the client to the GA. That's 4 ways things can go wrong. Well, how about based on whatever zip code you put in across the country, a live calendar to book your exam right on the spot here. I picked my day, I picked my time, just booked the exam. It was that simple. Client gets a calendar invite right to their calendar, as well as the examiner calls the client the day before to remind them of the exam. Ever since we've implemented this new structure here, our exam completion ratio has gone through the roof. You can probably see why, right? All right, last step, I can sign via email if I'm not using Zoom for some reason. Let's say we are using Zoom, I would hit sign now, or your client's doing this 100% by themselves, you would also hit sign now. Or we get past this pandemic and you can see your clients face to face, you would also hit sign now as well. Just like that, all the information auto-populates to DocuSign. Bada boom, bada bing. A fully completed 60, 70 page paper application. My finger's getting tired here. Hopefully you can all appreciate how fast that was. That might be a record for me. So you all know how DocuSign works. You basically just, you start here. Do you know that Zoom has a feature where you can actually pass the screen? A lot of people don't know about this, but you literally don't have to move from your home or from your desk, from your office to do this. So you can, I won't do it right now, but I can pass the screen to someone on this call here and let them DocuSign. So let's just assume I just did it. I adopt my signature, and you all know how easy DocuSign is. I just point and click and hit finished. Welcome to the future where life insurance is heading. That's the process. That's how easy it is to help your clients take advantage of long-term care. Let's close that out there. So perfect. We got a lot of questions here. So what I want to do is try to stop it on 30 minutes there, but let's go ahead and keep on asking your questions here. I will go ahead and answer as many as I can. Please start asking the question about long-term care. I do want to show you, we do have a way in the BOSS system to market this. So if you go to marketing, if you all look, we have the long-term care. Here we go. There's a long-term care presentation there. The policy review is one, right, we talked about as well, but let's just go to long-term care. I almost wish we would change this picture to a 40, 50-year-old because again, times are changing now. So I'll talk to our tech team about changing that. But look, there's your campaign. It'll go to your link. It'll have your picture, your information. I clean up pretty well, right? So there you go. So you have two options here. If you don't have like an email service like a MailChimp or Constant Contact, you can manually plug in up to 100 emails at a time. Does everyone see that right there? So you can go in there and just plug in your emails. You hit submit. If you do have a service like a MailChimp or Constant Contact, what you can do is hit HTML and then just hit copy. You can copy every single, what I would do at that point is do all these, but you can do all 7 campaigns and you do what's called a drip campaign where it goes out once a week, once a month, and that way you're touching your clients on a consistent basis there. So that's how you can market long-term care riders right from the BOSS system. So hopefully go in there go into the handouts and get that marketing piece there. If for some reason you can't find it, you can always call your marketing manager and they can get you those marketing pieces. If for some reason you don't have a marketing manager, I'd love a chance to help you out and help you grow your business. So again, thank you so much. I'm going to give it a second here, read through some of these questions. But again, I appreciate all your time. I'm looking forward to helping everyone help with their long-term care needs. Okay, let's go ahead and do this here and make sure all your clients are protected. Put your questions in. Everyone else, you have a blessed day. Thank you for listening. And let's go ahead and protect the clients here. Talk to you soon. Hello, questions? That's a lot of questions here. So someone asked a question, which I thought I answered during the webinar, but all you need to do long-term care is you have to have that 8-hour LTC course, which is extremely simple. You can go right online and do that, and you're all set up to go. So and then you obviously have to have a life insurance license. So hopefully that answers the question. Someone asked, does the system automatically generate the right percentage for long-term care in home amount based on the state you choose for the client? Or do you input that? So you basically, remember, the percentage that you're going to get for long-term care is whatever the death benefit is. You can get up to 4%. I always recommend, you can go down from 4%, but I always recommend keeping it there because the client doesn't have to take that amount out. The only time I would probably drop it from 4% if they're going over $1 million, because the most you can possibly get is $50,000 for long-term care a month. So you could drop that down to 2% if you're going to go over $1 million there. Hopefully that answers. Good question though. So someone asked, how does the cost of insurance get revised through these policies as the years go on? It's really the same. So as you know, I'm sure you all know, why do we have cost of insurance on these policies? Why? Well, guess what? If you bought a policy today, right, and you're not here tomorrow, the carrier's on the hook to pay that death benefit. There's no questions asked. That's why we have cost of insurance charges, because they have to cover that risk there. As the policy goes longer and longer, you're still going to have more cost of insurance charges. So those never go away. What does go away is my surrender charges. So these policies have early surrender charges in the earlier years, but then they grow after that. So just a quick visual. If everyone looks here, you see that my policy value is what's currently growing in the policy right now. So a very easy way to figure out what my costs are, I take my plan premium, I subtract it from my policy value. Those are my fees the first year. Does everyone see that? My surrender value is if you say, hey, I want to take every dollar out of the policy and walk away. Now, normally when you run these incorrectly, you're going to have zeros for the first couple years here. Because we're doing a 10-pay premium, which is what I advise, does everyone see how we only have 1 year at zero? So, and then this picks right up here because what we call this is max funding. Doing that 10-pay is we're max funding the policy. To me, it's the most efficient way to do this. Obviously, not every client can, but if they can, I'm showing you the best foot forward first. And then you'll look here. So at some point here, it looks like at around year 11. Does everyone see that? So does everyone see how my number is the same there? So what that means is that my surrender charges are gone at that point. So I'm not taking a penalty anymore for surrendering. Now, my cost of insurance charges are always going to be there because why? Well, I have $1 million death benefit here. So that's why so those fees do continue. Typically, if the death benefit goes up, they even go up higher. So hopefully that answers your question there. Long-winded, apologize there. Let's get a few more questions in here. So someone said, can someone who's older do a tax-free rollover of the cash from the non-qualified annuity to a life insurance policy with an LTC rider? To make it simple, if the policy has already been taxed, then it's not a problem. If it has not been taxed, then it can be more of a challenge. So that's a great question there, Brad. I'd love the chance to, I'm not sure if I'm your marketing manager or not, but I'd reach out to your marketing manager, maybe send over an email with what you're thinking about, and we can evaluate that and we can see if there's an option there. The key thing is taxed. That's where you become, if the money is not taxed, then it's a little more of a challenge. If it is taxed already, then you're good to go. Great question. Someone said, can we personalize the photo instead of the grandparents? As of right now, you cannot. That's what's there. We would have to change that. So I will talk to my tech team about trying to give another option here for the long-term care. Some great questions today. This is the most I've seen in a while. New year, everyone's pumped up, ready to go. Someone said, how do you sign up for the LTC course? You could just go to any accredited, there's a few different companies there. WebCE is one of them, just webce.com, I believe. You can go and you can sign up for any class you want there. So, and you can do that. It's really simple, very easy. Just a few more, and I'll let everyone go. All right, so here we go. We got a few more questions here. So there is someone asked about State Life. State Life is a great option as well. To me, State Life is great when you have two people, so you have a couple, because they have what's called a continuation of benefits rider. It's a great feature with long-term care. I like this for younger folks, and also because it's an individual. So you would do, if you had a husband and wife, you can do individually for each person, but a separate policy. If you do have a couple, you can look at the State Life. It's a great product as well. Thank you for the reminder there. Here's a question. Someone said, if I already have someone I'm working with, a wholesaler, can we still work with you? The answer is yes. I'd say up to 50% of our relationships already have someone they work with. Because of dual contracting, we can just basically set you up with a completely separate code. You don't have to go back and have an uncomfortable call with your relationship. So again, people work with us because they want to, not because they have to. So it's a really simple way to work with us here. We also offer something called just-in-time contracting, where we have 14 days after the app comes in, so you don't have to get appointed up front with all these companies. We have a one-time packet, you knock it out, and you're ready to go. Listen, I really appreciate you all staying on here. Great questions. Yanni from my office will reach out to any of you to answer any other questions you have, and let's see if we can get some long-term care meetings set up with your clients. I'm here to be a resource if you'd like, and let's take it from there. Thank you so much, everybody. You all have a blessed day, okay? Talk to you soon.